Gold is currently trading inside a highly compressed structure, and the market is whispering signs of a possible explosive move. Institutional players have positioned themselves quietly, while retail traders remain uncertain. With price hovering below a long-term monthly resistance zone and consistently bouncing from historical supports, the charts are telling a story. In this video, we'll break down XAUUSD using the monthly, weekly, daily, H4 and H1 timeframes, giving you a full multi-timeframe edge. Whether you're a swing trader, intraday scalper, or investor, what's happening in gold right now is critical to understand. The monthly chart paints a high-level picture of structure and liquidity. Gold has been respecting a long-standing resistance zone between $3,450 and $3,500, an area where prior months have left large wicks, but no strong bullish closures. This signals institutional supply, where banks and funds are likely unloading positions. Beneath current price lies the major monthly support zone, around $3,080 to $3,220, where price previously bounced with conviction. These zones are not just technical, they are behavioral. Smart money defends these areas because that's where maximum liquidity exists. Stop-loss clusters, pending orders, and re-entry traps. Until we see a candle close above $3,500, upside remains speculative. On the weekly chart, gold is showing a tightening range between resistance and support. Several recent weekly candles show upper wicks rejecting $3,450, confirming the strength of that zone. However, there's no major sell-off, which means the sellers aren't aggressive, distribution might be in progress, or buyers are absorbing supply. The weekly support zone between $3,100 and $3,150 is a clear demand area. Look at the large bullish engulfing candle that formed after the last test of this zone. This kind of price behavior shows smart money accumulation, possibly in anticipation of a longer-term breakout. The real clue lies in whether a strong bullish candle can close above the weekly highs or not. Now, on the daily time frame, we see a long-standing sideways structure, where price has been stuck in a consolidation range from $3,120 support to $3,450 resistance for over 30 sessions. This type of market compression leads to expansion. Notice how the highs are getting slightly lower, while the lows are slightly rising, creating a tightening triangle pattern. This often means a breakout is imminent, and whichever side breaks with volume and momentum is likely to dominate the next move. Traders should watch for clean daily candle closes outside the range, as that's when the trap is usually sprung. This daily structure is also filled with liquidity hunts and false moves, typical smart money behavior. We saw multiple days where price dipped just below the $3,280 minor support, only to immediately reverse. This is not random, this is called a stop hunt or liquidity sweep. Institutional players often drive price below obvious support to trigger retail stop losses and fill large orders at a discount. If you look closer, these wicks are followed by strong reversals, a key sign that these levels are being used as springboards, not failure points. This is where patience pays off. Wait for confirmation, not just wick rejections, but volume-based breaks and follow-through candles. The 4-hour chart is a goldmine for intraday to swing trades. It clearly outlines 3 structural levels: the resistance zone at $3,450, $3,480, the mid-range support at $3,270, $3,290, and the deeper support around $3,020. Price has been reacting cleanly to the H4 zones, suggesting this is where most liquidity orders are getting filled. Recent price action showed a bounce from the mid-range, with a pushback toward resistance, a sign that this level is currently holding. If we see multiple rejections at the top without a break, short setups become valid with tight stop losses. If price breaks cleanly above with volume, long trades targeting monthly highs are valid. H4 also offers great insight into entry confirmation behavior. In the recent session, we saw an order block formation after a liquidity sweep, a bullish engulfing candle, closed above the previous support-turned resistance, creating a valid entry signal. This type of price behavior shows where institutions are active. It's also crucial to note that price retraced exactly into the OB zone before continuation, providing a sniper entry. If you're planning entries this week, look for OB confirmation within the H4 mid-zone or a liquidity grab followed by strong bullish or bearish imbalance. Now, let's dive into the H1 chart, ideal for precision scalping. Here, the structure reveals a major fake breakout below $3,280, where retail traders likely went short, expecting continuation. Instead, the market reversed sharply and reclaimed the level, confirming a false breakdown. The H1 resistance zone near $3,452 also matches perfectly with the higher time frames, a major sign of confluence. Smart scalpers use these zones of rejection for scalping opportunities with low risk and high reward setups. Look for micro double tops, bearish engulfings, or FVGs, fair value gaps, near resistance to initiate short-term trades. This strategy is powerful because all timeframes are aligned. Monthly resistance equals H4 and H1 supply. Weekly support lines up with daily structure. This is called multi-timeframe confluence, and it offers the highest probability setups. If you only trade one timeframe, you miss the bigger picture. But if you understand how institutions build positions across frames, you can enter where they enter low risk, high reward, and with the trend. This is how professional traders build positions over time, not in one candle. To wrap up, gold is preparing for a major directional move. If price breaks and closes above the $3,450 to $3,500 resistance zone, we may see a strong rally toward $3,600 or more. On the downside, a confirmed break below $3,280 or $3,420 would suggest institutional distribution and a potential correction toward $3,000. Either way, this is not the time to guess, it's the time to observe and react smartly. Use this full roadmap to structure your entries, manage your risk, and never trade blind again. If you got value from this breakdown, please like, comment, and subscribe to Financial Freedom FX for more weekly gold forecasts.